SBI Van Capital here is actually the Singapore branch of SBI Holdings. SBI Holding was, it's a asset management financial services firm listed in Japan, and I think it has 26 offices globally, and we primarily out of the offices outside of Japan, we do primarily PE, VC activities, and out of the Singapore office here, I look after one of the fund, which is a Web3 fund. So we look, into interesting Web3 companies and really hope to, support them as well. Yeah.
Yeah, SoftBank. That's a really heavy responsibility for you.
Yeah, I think there is a little bit of a misconception there. I think so. SBI Holdings it was originally SoftBank Investment. But it was actually, kind of like spun off and listed separately on the exchange, I think, probably close to a decade ago. So right now, SBI Holdings itself have a life on its own, but I think probably on some shareholding level and stuff, or even senior management level, I think there are some ties. But outside of that, we kind of operate, very differently from, the Vision Fund and stuff like that. Yeah.
I'm sure, pretty sure it's a bit different. It's Web3. All right, next. We have Jaden Chan.
Yeah, thank you. So my name is Jaden Chan. So I was actually from Hong Kong, and I'm working in Flow Traders. So long story short, Flow Traders is like a very traditional prop trading shop. So we are headquartered in Amsterdam, also listed in Euronext, also Amsterdam. So we have our arm in Hong Kong, New York, all around the world. So crypto-wise, we start like a trading arm and venture arm. Investing in all those kind of infrastructure stuff and DeFi stuff. So that is what we are. We do investment, we do trading, we also do like incubation and a bit on and off chain market making stuff. Yeah, so that is what we are. Thank you.
Okay, really impressive. Well, thank you for being here. So next we have Frank. Fun. Right?
Hi everyone. Thanks for having me. I'm Frank, partner at Arcane Group. Arcane Group is a boutique venture capital Web3 fund based here in Singapore, managing more than $200 million US. We have been invested in a lot of Web3 infra and applications cases, including Animoca brands, Discord, and other ZK rollup projects. So we are quite a very kind of boutique team. I used to work in Huobi since 2018, and I was also the investment director in Huobi. So now I'm covering the Asian and US market. So looking forward to talking with you more.
Okay, beautiful. All right, so audience, I need your help. I need you to think of the questions for the Q&A later. I will have at least 10 minutes. I hope to finish the discussion, but I think it's going to be hard. I will try for the Q&A. So think about the questions, and then friends, don't hold back. All right, we'll start. Okay, questions. So I think for the first question, all right, let me start with Mr. Key. All right, so Mr. Key, what are your views for Web 2 to Web 3 startups?
Any business, for that matter, irrespective of which sector it is in, has to have strong fundamentals. Proper revenues, clients, etc., that can make the business sustainable. And Web3 space for long has been on the innovation side. A lot of new technologies have been created, but their sustainability has always been a question. And they can run only so much and for so long with investors' money. At some point, they need to generate their own revenue, and Web2 businesses already have that in place. So I believe as Web2 businesses see the blockchain's technology as a proper utility within their business, they're able to adopt the technology. They're going to move to a Web3 as a beautiful transition, and Web3 will gain more and more businesses that are not Web3 native, but a hybrid, and those are adopting the technology with the use cases that would actually create the revenue for the token holders. Because at this point in time, as any investor, when we look at it, we see the equity and the token as two separate things, because the token holders are not necessarily really gaining anything from the growth of the business, because the revenue is not attached to the token, and that's a big trouble, that's a big challenge. So as this transition happens, I believe there's going to be greater growth, and That's going to be bringing more fundamental to the whole industry, making it more safer for even traditional investors to start looking at businesses without that fear, because there is some skepticism in place right now when a traditional business hears about the whole crypto and Web3 narrative, and that should change, and that will change in the coming period.
Absolutely. That leads me to some questions later for the macroeconomics, which is great. All right, so okay, let me ask, let me see. Arthur, all right, next to you, all right? So, okay, leading to that, what do you think, what kind of trends, behavior, and mandates do you see in the East versus West investments?
So yeah, I think that's a very interesting question. Based on my experience, the major differences between the Eastern and the Western. First and foremost, let's kick off with risk appetite. Generally, the Western investors will have a bigger risk appetite, which means they also will be expecting higher potential gains as well. Certainly, of course, we are always able to debate the fact that the standard of living in the Western part, say for instance, in California, Palo Alto, and San Fran, of course, even just to recruit as a software engineer probably takes approximately about $200,000. And of course, as compared to if I deploy as a software engineer over back in Vietnam, and based on my experience, really good ones, I think I can deploy for anywhere between 100 to 120, depending on my negotiations at times. But of course, that it really spells out the standard of living in the respective country. But having said that, I think their risk appetite, that's where we're able to see the growth in the Western investors to have high potential gains, so much more than the Eastern investors oftentimes, because of the dare to take the risk, and of course looking in the whole potentials high growth as companies. The other thing that I realized is also has a lot to do with the investment style. Oftentimes, the Eastern investor would rather want to get hands-on with the operational, the management, supporting a lot of the guidance and also mentorship with the project founders. As incomparable to the Western investors, they oftentimes giving more of a full autonomy to the project builders to be building that projects, and it's a lot based on giving you full discretion on how you want to run your business. And of course, last but not least, we always talk about the deal making. Eastern investors, oftentimes, especially in Southeast Asia, it's so much about the trust, relationship. And I mean, I remember when I was running my previous startup, and I remember when I was trying to raise money, it's always about just building a relationship, building rapport. And I specifically remember this investor who loved drinking so much, and he said that, oh, I'm only going to write a check to you in the event if you're able to drink with me for 3 months consecutively. I mean, it's like that's crazy, right? And then when I went over to Palo Alto, and when I did my first raise, and in Palo Alto they have this called the handshake protocol, and it was I was in Bazaar, I was sitting in Starbucks, did my pitch for the 5 minutes, and later he say, oh, this is exactly what we're looking for. He gave me that handshake, and I say that, oh, so does that mean that's a yes? Oh, you haven't heard of the handshake protocol? And a handshake protocol, if you guys Google that, the moment once when they give you that handshake, that means that they will write a check to you, and oftentimes they write a check within 24 hours. And I guess that's really such a big difference. And the fact that I asked him the question, why did you even invest with me? You barely even know me. And he just said that, that VC said that because what you pitch, clearly it wasn't a first pitch, and clearly you have failed many times, and all we want to see is the quality and the traction, of course, and of course whether you know your thing. So I think that really makes a big difference between the Western and the Eastern investors.
I understand what you mean. Even through platforms, you need some kind of personalization to talk to the people to get a sense of it. Yeah, so totally get what you mean. All right, so I have the next question for, I would say, Wenkang, all right? So given that for investments for innovative projects like Web3, So how is it like if it's going to be like, what do you think about the technology for AI, IoT, and all the consideration with data-driven companies? Is there any effect on the changes of the investment?
I guess, yeah, I guess these questions, in some ways, I think it's kind of, I would say it has some implication and ties with the Web3 side. But I think in itself, it could also be kind of like like one of the, top few frontier technologies, right? When we talk about blockchain, AI, IoT, machine learning and stuff like that. But I think in actual fact, I think if any kind of investments that we look at, I think sometimes I think a lot of VC will try to actually bucket this particular business or this particular startup in in kind of like a silo way and draw similarity. I think that's helpful for VCs to kind of like quickly review and kind of like do a quick comparison. But I think a lot of times, I think sometimes I myself also see some of the startups actually use kind of, let's say, AI within the Web3 space and stuff like that. So things are kind of like quite fluid, and it really depends on what are the kind of application that the various startups actually have, right? So take, for example, I think at least in my opinion, a lot of people I think make very clear distinction between Web3 and Web2. But I do see that ultimately the world is going to converge at some point of time, right? Because I think Web3 right now, it's probably still quite a small market in the sense, and we talk about companies and startups in the Web3 space that can really have a very sustainable and profitable model. I think they must in some ways serve the Web2 clients or help the Web2 clients to actually get into the Web3 world. And so you could do so by a various number of ways, right? And kind of like applying AI, or even kind of like if you're an AI company, applying some form of your product or some form of your services using decentralized technology. I think that itself could be some of the ways that you kind of infuse into it. So I myself see that eventually the world is going to converge, and I think it must converge. If not, I think Web3 would ultimately still remains a very small space and a very tight community, and think that for any investors itself, it won't be too much of an excitement. Yeah.
Okay, I see. It is really an interesting market and time to be in. Knowing the speed of production and the cost of producing AI. And now I don't want to go into that, but with blockchain itself, decentralizing everything, I think it's really intriguing. All right, so let me ask next, Frank. All right, so how would Asian crypto VCs leverage the local market advantages to empower the regional entrepreneurs?
Oh, yeah, so this is a very good question. As we understand now, the world is divided into two parts. The US market is leading the top tier like public chain projects like, Aptos, Sui, all of that. And most of the Asian, VCs and local projects are more like application driven. So as a local, a Singapore-based, crypto VC, we really want to leverage the local talents, market potentials, and the kind of, technical teams we can leverage from not only from China but also Vietnam. Generally speaking, Asian markets has a large population. It's more like application oriented. 2 years ago, like the GameFi projects, DeFi projects, all of that really have a huge potential here. And now I believe the local entrepreneurs, Chinese entrepreneurs, Singapore local entrepreneurs, NFT projects, all of that really have make some difference. But also we need to consider what's the fundamental innovation model we can contribute to the industry. US investors and entrepreneurs are building a very high and a fundamental research-driven ecosystem, while Asian markets is more like how to say, markets-driven, application-driven, all of that. And also this has some hype related to the macro environment. So last year is a bear market, so most of the application projects cannot perform well. But I think this year, moving forward, we believe, next year, the Bitcoin, hash kind of diminishing, etc. So we believe another bull market is coming on its way. So we are investing in some, applications built on the roll-up, like, the ZK or OP, and also we want to develop the ecosystem on Aptos and Sui. So that's what we want to build. In terms of the applications like, SocialFi, GameFi, DID wallet, I mean, most of the applications, we would also bet on that. But we really need some real innovation on that, not just some traditional Web2 products with some tokenomics model. We really need to be more crypto native and more innovation driven. Yeah, thanks.
Okay. I think it's definitely something that we should look out for. Last but not least, the exciting question. All right, so how do the current economic factors, I suppose the fiat versus crypto and a war, either impeded or accelerate VC's activities in the blockchain or DLT space?
Yeah, great question. I think one important thing to notate are the sequence of black swan events of last year, right? And how that actually impacted VCs deploying. I think their overall financial psychology, right, was definitely under duress. But I think the driving factors of actually deploying capital, I mean, us, for instance, we, raised a equity-focused VC. I think explaining to investors a structure of equity focus and what a token warrant actually means was a repetitive cycle and repetitive theme of last year. I think a lot of people, especially towards the earlier part of this year, if you look at January, right, we saw a major movement, a shift, right, of activity and volume moving to decentralized exchanges from centralized exchanges, obviously all stimulated from the events of FTX. And I think the overarching theme of last year is bad actors will always be bad actors. It doesn't matter where we are in the economic cycle. I think believing, though, that inflation is under control is a fallacy, in my personal opinion. I think we still have a very long way to go. And in the past, you would actually hear this statement made, right, of Bitcoin and digital assets overall being an uncorrelated asset class from TradFi. That is not the case, right? They definitely are interwoven, they're interlinked. That trend is only expecting to become more congruent, right, as the asset class matures, as more institutional capital comes into the space. I think a very important area to look at was, Q3, Q4 of last year, where you had major institutions, very reputable institutions, Nomura, BlackRock, DBS, SoftBank, entering the space, right, from a development standpoint, deployment standpoint, offering, various products to their client base. And then FTX happened, right? And I think one important thing to note is that we recovered very quickly, right? The market cap came back, Bitcoin rallied back in 82 days, right? From a major catastrophe in the market. It shows a high degree of resiliency in the market, and the forward outlook, right, has remained unchanged. So CPI print came out recently, right? It was ambiguous in a way. I think we need to see, and this is not to sound insensitive, right, but we do need to see unemployment go up in the US. That hasn't happened yet. We do need to see people starting to get close to defaulting on mortgages. Again, I don't want that and wish that upon anyone. But until we start to see more max pain in the US, I think that the Fed is not going to change their stance and go in the opposite direction. With that being said, I think we do need to separate macroeconomic outlook from VCs in the blockchain space. This is one of the most fruitful times to be deploying capital. not when it was, November at all-time highs, Bitcoin price, hovering around 70K, market cap at 3 trillion. That was probably not the best time to be deploying capital. You should have already made some exits and been hunkering down for, winter, which we're in right now. But I think there were a lot of institutions that watched what happened back in 2017 into early 2018, sat on the sidelines way too early, retail-driven market, I'm not going to enter. They sat back during the last bull cycle, paying more attention though, being more strategic, starting to develop a plan of entry, and I firmly believe that this next run is going to be dominated by institutions. Also, hopefully, right, there's some more regulatory clarity that comes in that brings a market cap of this asset class, above that of gold. So I think a lot remains to be seen, but deployment of capital now, in my opinion, hasn't slowed down at all from a VC perspective in the space.
So you think it's not going to slow down then?
I don't think so. I think there's a lot of money that invests in the tech. They invest in the future ramifications of what this technology has already proven that it can do. And doesn't matter where we are in the market, money will be deployed and is being deployed.
Right. So I have an open question. So anyone can answer this. So given that the potential regulatory and legal challenges in Web3 projects, so what kind of strategies in general that you can do to mitigate this risk for investment? Anyone?
If I may, the way I look at the regulatory landscape is, one, as an investor, you would obviously look at those that are rightly regulated, registered in the right places with the right licenses, so on. But it is also important to understand that there will be some businesses that are not regulated, not structured appropriately, but that has ability to better the technology to prove a use case, which could later get acquired by any other company or any entity that is getting regulated over a period of time. But waiting for regulation to happen across board is going to be super time consuming. We're going to be missing out on all the next great opportunities in that process. Of course, when you say something like an exchange, sure, wait for it to be regulated in the right jurisdiction, because there are already set rules in place and license and models in place. But that is not the case for a lot more business models. So that is a challenging part. If you look at asset tokenization, you would rather wait for a regulation there. It is possible. There are areas where you could structure it. But when we look at some of these DeFi protocols and other areas, it is very hard. And while we need to have the prejudice on the regulatory side to wait, analyze, understand, that cannot become a bottleneck, that cannot become a burden that's going to stop us from investing on an innovation. There would be a lot of decentralized innovation coming up, which can never be regulated in the future, because I'm a believer of blockchain for what it truly is in a decentralized way. I don't think and I don't believe regulation is going to capture the whole space. I would definitely see in the future a part of the industry being regulated businesses and other part that will always stay unregulated because it cannot be regulated. There's no CEO who would sign a document for you. There is no one who would come to your office and give you a biometric thumb impression and you scan their retina and say, okay, this guy owns this company and this entity. That's not going to happen. And the more we push towards DAOs and decentralization, the more we as the crypto community make a stance on being out of that government's regulation, but still being regulated by what the industry cryptographically regulated as a community regulated projects. So where is a place for that? Where is the, where would we fit that in? I would still say they're regulated. It's just regulated by another body, which is not necessarily a government. So I think we need to make provision for all of those parts that's coming in, and we need to stay open because we don't know what shape or form it's going to take. And if as investors, if you're just open to the possibilities that there could be something that is not the same way that we all have a consensus on right now, I think that's good enough as a start.
Yeah, maybe like I can try to add a little bit on top of like your opinions.
Go ahead.
Sure. Like, so flow traders, I mean, technically it's a regulated entity. and also listed entity. So we have a lot of like conversation ongoing with different kind of like regulators across the world. So especially like recently, there's a lot of conversation happening in Hong Kong, given that they're going to like issue those like government regulated stable coins. They're going to open to retail markets with the regulated exchange. They launched a tokenized green bonds, all those kind of applications with utilization of the blockchain technology. So from our perspective, so we do interact with a number of different kind of DeFi protocols when it comes to like a financial perspective. So what we are trying to do and what we are trying to say is the regulators, what they care the most is like how to protect the investors. And they don't really like forgetting or like allowing the coexistence between like the permissionless and the permissioned DeFi applications. So what we're trying to do is how we can bridge the permissioned layer with the permissionless layer. Because there is a lot of like permission layer, I mean, especially towards the broad lending perspective, which can increasing the whole effectiveness and the efficient when like the borrowers meet the lenders. And also handling a lot of like transparency and a lot of like different kind of issues. So I totally agree with what we said, right? I mean, so institutional DeFi is very important in 2023, and we believe that is a key factor which will drive the wider adoption of the whole like digital asset or crypto market. Where in the meantime, I also agree with the technology on roll-ups, on ZK, but the problem is when we are talking about privacy, how do we keep the privacy while in the meantime also fulfill the regulatory requirement, especially on the risk and the compliance perspective. So that is what we try to solve. I mean, especially like from venture capital like us and from like financial institutions like us. And that is what we should do and elaborate to make it happen.
So some kind of hybridization with the centralized and decentralized, and that's what institutional funders are looking into. Right, okay.
So I'll tell you a funny story. Exactly a year ago, I was lobbying the government. So the good part about Malaysia is they always like to give you, I'm not sure whether there are any Malaysians besides in Ryan, but I believe like if you've probably have been to Malaysia, it's like the government will say, oh, you know, we know what's happening, we know what's going on. So consecutively, I've been probably lobbying maybe 4 times, and it's been almost a year. And of course, I lobbying since like, wow, like even the Boo time, and they say that when the Central Bank Negara, when the Securities Commission, and they say that, oh yes, it's like we're super progressive towards Web3. Oh yes, it's like, yeah, we're not taking cryptocurrencies as illegal, because it's like, then again, because there are 4 centralized exchanges like in Kuala Lumpur, so it doesn't make sense. Yeah, we have the blockchain mandate and everything, but each and every time without fail, when I head back to the government or semi-government, they're going to constantly just giving back the same answer. Oh, we are getting there, we're just polishing up, we're just fine-tuning many things. And honestly, I'm just bizarre trying to figure out what is there to polish. It's just really, are you ready to really have a head start? So I think when it comes to regulation and just having the legal framework, I think that's very, very important, and that's what I often tell the project builders or even investors. I think it all boils down to us as industry leaders who are on the ground to really make that big drastic change. Like in Kuala Lumpur, it's rather, I probably think among the whole entire Southeast Asia, I'm scrambling every day trying to figure out how to really even want to gain traction, just trying to build something over back in Kuala Lumpur itself. But very unfortunate, there's just much more movements that's really happening around the neighborhood countries in Southeast Asia. So it's really, really pain in the ass. But having said that, people like us who are on the ground and making a big change, making an impact to the livelihood of the people, of the community, or the future generation of tomorrow, I think we shouldn't be waiting for that legal framework or regulation. But having said that, I believe that with whatever that's happening right now, you're probably going to take easily at least the next 2 bull run for everything to be legalized. And I think by then, I think that's probably where the mass adoption is. Yeah. So again, I think all of us here and the choices that you're making sitting right in front of us, I think today you have this great opportunity to be doing something so wonderful.
Yeah, we need that kind of flexibility, like the in-between, to get things done for the underserved. Do you have, for Darius, how about you? What do you think?
Well, I used to be an attorney, so I used to do securities law. I am 100% for some strong regulatory framework. I think what we need to look at, though, is I'm not looking for a framework from Kenya or from Vietnam per se. I'm looking for the, in essence, global financial superpower markets, right? Obviously, America leads the charge. You find a lot of regulatory boards around the world will follow the statements from the US SEC. I think right now, if they haven't, and I'm in agreement, they have all the knowledge and all the information they need to make decisions now, right? But we talk about bureaucracy, we talk about paperwork, we talk about multiple decision makers, we talk about voters, right? And being able to substantiate decisions is not so easily reflected, right, in legislature. It takes time for that to happen. Ultimately, I think the top priority of the US, number one, is to get their taxes, right, to be able to tax their citizens. I could be in a hole in Afghanistan and I'm an American citizen, they will find me, right? They will literally be knocking at the door of the IRS saying, hey, you need to pay your taxes and you can go back in the hole. So, and no problem with that. I pay my taxes, very happy to pay taxes, and it should happen. But I think the secondary is obviously protection, especially when you talk about retail, right? So obviously we have accredited investor status in America. Let's face it, right? KYC, AML, many times is having people put money into something that really they have no business putting money in. There's not a lot of information, I think, out there about what people are actually, placing their capital in and all. And I think we need to have some real serious consumer protection when it comes to centralized exchanges. There needs to be much more transparency. We need to understand if you have a native token, if it's FTT or BNB or whatever it may be, how are you actually using that token? Is it being used as collateral with a sister investment company that has no liquidity provision and can't be margin called, right? Those are things that we need to be aware of. So I think when it comes to centralized exchanges, 100% regulatory framework, no confusion, it should be black or white. I think there's a lot of areas I agree with Key. There are certain areas that regulation will not be able to touch, and that's okay as well, right? But when it comes to proving that this person, is using a US bank account, moving fiat to Coinbase, and moving, BTC or Ethereum back to their Chase bank account, we should understand what's happening, and we should also understand if that exchange is registered in the US and servicing American citizens, how are we being protected, right? So we still have a long way to go, but I'm in full agreement that the moment that we do figure these things out and clarify, that's when the floodgates really open and mass adoption happens, and I don't think we're far away from that.
Yeah, I think in general, even for investments, if you want to move funds for investment, and that's when all these the systems that are occurring right now, does it provide that kind of flexibility for investment in different regions? So I would love to ask for the opinion, or for Wenkang, do you have opinion on this?
Yeah, sure. So I think ultimately it's kind of like finding the right balance. I think from the government perspective, it's about controlling it to a certain extent, like regulating it to a certain extent that wouldn't make like innovation dry off, and yet on the other hand, kind of regulating it to a point where retail investors, especially, or some other investors or users are actually protected from this new space. So I think a sensible government would try to make a point to kind of regulate until the point of balance, I would say. And of course, for countries that, or rather for governments in some other jurisdictions that probably, done till whether is it over tightening or overly loose, I think that would kind of sway either way of it. And I think from the investor side, looking as from an institutional